Welcome to the Standard Deviations podcast, presented by Orion Advisor Solutions and hosted by Dr. Daniel Crosby, Orion's Chief Behavioral Officer and New York Times best-selling author. Today's investors expect more than a transaction. They want a relationship. Show how your firm merges EQ and IQ with Orion's V-Fi 20, a new shareable assessment developed by Dr. Daniel Crosby that provides you with emotional and attitudinal insights into clients to facilitate more meaningful investing conversations from day one. Get started today at orion.com/B-Fi20.
Hello, and welcome to the Standard Deviations podcast. I sounded surprised there. I was like, hello. Anyway, hello, welcome to the Standard Deviations podcast. I'm your host, Dr. Daniel Crosby. I'm joined today by return guest, Derek Hagen, founder of Meaningful Money, a financial therapy and training firm. Derek helps clients live intentionally and mindfully using money as a tool to support their best life. And he also trains advisors to do the same through training, master classes, and educational content. He's one of my favorite discoveries content-wise of 2023, which is why I've had him back on today. Welcome to the show, Derek.
Thank you for having me and having me back. It's always fun to chat.
Yeah, we got a great response last time. I think from all the things you shared, we had, easily 250 episodes in, easily a top 10 in terms of sort of the response that I got. Just personal notes from people, personal feedback, texts. That's always super meaningful to me. So thank you for coming back and sharing some more wisdom with us.
Absolutely. Happy to hear it.
Yeah. So we are here today to talk about resistant clients and, everyone's favorite topic. And I wanted to start with an observation that I've made, and maybe you've made a similar one, maybe not. But there seems to be a chasm in my anecdotal experience between what the research says about client noncompliance and what advisors say about their own clients. So, depending on who you ask, non-compliance with advice is going to be somewhere in the 50% range. And the research, meaning that, if an advisor has 100 clients, half of those clients are going to be ignoring their advice in some meaningful way. But then when I talk to advisors and sort of share these kind of stats, the advisors will say, well, not me, that everyone does what I say. Have you seen the same thing? Have you not? And if so, what do you think accounts for this difference?
I don't know that I've seen that level of disconnect, but admittedly, I'm less familiar with the research that you're talking about. So if it's the case, if I'm an advisor, my first question, and I even asked this to myself as you were going through that, was to question the data. Who's in this data? Who's in this data set? Are you talking to brokers? You're not talking to RIs. You're not talking to people like me. If you were to find people like me, of course, that would be higher. So I fell for a victim to confirmation bias. I think that everybody falls victim to, literally, where I don't even notice things that don't fit my narrative, so to speak. And I'm very easily going to see things that do. So I can imagine a situation where I have tons of clients. They're all implementing my investment advice, and they're implementing my advice when I told them to go see that tax professional, and they're implementing my advice when I told them that they need to tone down their spending, or maybe they need to dial up their spending, and they all did it. But I forgot to even recognize those clients that we've talked about going to update their estate plan for a year and a half, and they're not doing it. So I don't even remember that. So that's just my amateur answer to, it feels like it's probably a failure to notice the clients who aren't implementing.
Yeah, one of the most interesting things I found when researching the behavioral investor had to do with this idea of rosy retrospection. And in that book, I looked at the data around how closely people remember their trading history relative to what actually happened. So this is looking at like day traders and people who actively trade shares. And then they ask them, what percent were you up or down? And, how many trades did you make? And how did you do? And what we found is that people disproportionately remembered the good stuff and sort of shoveled the bad stuff under the rug. which is, human nature. We're all sort of wired to preserve our self-image and our feelings of self-worth and self-competence. So, both things seem likely. I think if you're an advisor who's running, the kind of advisor who listens to a podcast about financial psychology and is actively trying to implement some of these things, then perhaps you have a better than average success rate. But it also seems likely that people are misremembering and sort of having this rosy retrospection. I'll never forget one of the takeaways from this meta-analysis. It said basically like people's memory of their trading history was indistinguishable from zero, basically. Like people had like effectively zero recollection of what they had actually done. So now that we've figured that out, Derek, let's turn to one of the foundational ideas in the social sciences. We've talked about this at least one other time on this show, and we could spend a month on it. This is foundational in the minds of social scientists, psychologists everywhere. It's the stages of change model, also called the trans-theoretical model, if you feel like getting fancy and looking up the original research. But I think understanding the stages of change framework is critical for advisors. When they meet a client who may be pushing back, I think the stages of change model gives a good framework for having a conversation and planning future interventions. Can you introduce that model to us briefly?
Sure. I prefer stages of change. It's easier to say for me. So if people are anything like me, when I was growing up, it just kind of felt like people would naturally want to change if they knew there was a better way to do something. Working out is only for gym rats, people might say. And then I say, well, actually, there's a lot of health benefits. You should consider working out. And they say, oh, I never knew that. Okay, thank you. It's maybe back in the day when people could have an argument or a debate in a friendly manner. But that's what I thought kind of would happen. And that's, you go into financial advising, and advising is in the title. So we're giving advice. People come to us for advice. We give advice. It should be a simple equation. Yet somewhere in my mind, I knew this wasn't the case because I knew and know people who smoke cigarettes and also don't want to smoke cigarettes. And what doesn't work is for me to print out the new Newsweek article that came out about how smoking's going to take 10 years off your life and quality of life is going to diminish. They don't look at it and say, wow, I wish I would have learned this sooner. Why were you sitting on this information? I'm going to save so much money. Instead, they push back with usually yeah, but statements. Well, yeah, but what 10 years are those? Not today's 10 years. Those are the 10 years at the end of my life and everything hurts and I'm alone and nobody likes me. I'll give up those years to continue smoking anyway. So there must be something more to it. And so it turns out as people are ready or not to change, and it kind of goes in stages. And the first stage of change is not really a stage of change at all because you're not even aware that there's anything to do. They call it pre-contemplation. So at this stage, I don't even know that there's something to do. Or if I did hear about I'm using the word change for something I might do, some behavior that I might implement. But if I hear of some change out there, it might not apply to me. So I'm still in pre-contemplation. So I don't even think that there's anything for me to do. It wasn't a problem until you told me it was a problem. And then once I start to think, well, maybe that's a thing that's existing in the world and I might consider it, but I'm not ready to do it. So now I've entered contemplation stage. So now I'm contemplating this thing, but I still don't want to do it. Or I still don't think I can do it. And then eventually there's more reasons for me to change. I could overcome that status quo bias a little bit, and I got more reasons on the pro-change side. And then I've entered preparation stage where I'm starting to prepare for implementing this new behavior or implementing this new thing that I need to do. And then finally you get to action stage. And action stage, if you're an advisor, these are your rock star clients. This is the person that I want to change. I'm ready to change. Tell me how to change. Here's a bunch of money. Help me change. This is your rock star clients that you want to replicate because this is where the CFP, the CFA tools work here. Somebody comes in, gives you $10,000, you give them advice, they implement the advice, they tell your friends they tell their friends how good the advice was, you get all these referrals. That's how it's supposed to be. And then after that, there's like a maintenance phase where they're implementing the new behaviors or the new ideas. And then like a termination phase where they're they're not going back anymore. So they've successfully changed. But the idea is, with all these different stages, we can't treat everybody as if they're in action stage, even though that's very hard to do. One, because we're advice-giving creatures. We want to help, especially if you're in a helping profession. The natural instinct is to help. And it just feels like people would change if they knew there was a reason. So it's very easy to fall in the default mode of assuming everybody's in action stage. At least that's how I grew up thinking. So that's kind of the rundown of the various stages.
No, it's a great rundown. And I think you made two good points. I think one of the things that we tend to assume is this sort of rational world, right? This sort of rational world phenomenon where we say, well, if people knew what to do, they would do it. You know, I see a lot of that conversation around financial literacy too. Like, oh, we got to teach high school kids what an interest rate is, and then they're going to make great decisions with their credit cards. Like, well, maybe. Like, I mean, it's a start, but I mean, I think if we look at our own behavior, each and every one of us does things every day, whether it's for our health or relationships or whatever, that is detrimental to those things that we know better than to do, that we persist in doing, right? I mean, man, I love sweets. And I know I shouldn't, and I just still do. And that's kind of how it goes. So I think, let's talk practically. We don't have time to go through every stage of change, but I think one of the most common is, say, moving from contemplation to preparation, right? Like, people have a germ of awareness that this is something that they should be doing, but yet there's still sort of no catalyst for that change. What's like a practical step an advisor could take to move someone from, say, contemplation stage to onto preparation and eventually action?
Moving people. So one thing that I think is interesting to talk about that I haven't mentioned yet is that people aren't just in a stage of change, period. There's different areas of their life. So take a silly example. I might be in the action stage of change of going to revisit my will or my estate plan, but in the contemplation stage with regard to cutting out pasta from my life. Right? So there's different stages of change. So an advisor could have one client who's in the action stage with regard to their investments and preparation for increasing their savings rate. And then you talk about their will and they say, I don't think so, because everybody that I know that's died has a will, and therefore wills kill people, so I'm not going to do that. So they're in the preparation stage for their estate plan, and then you talk to them about umbrella insurance, and they say, I don't know what you're talking about. So the same client can be in a different stage of change for various aspects of their financial life. So with that in mind, when you find a piece of advice that you're giving and the client doesn't seem to be implementing it, helping them motivate themselves. Finding motivation can help them move up those stages of change. And there's various ways to do that. Some ways are to add motivation, which we don't need to talk about today because that's a whole other bag of worms. But we've talked before about the three components of meaning in life. So purpose, connecting people with their financial purpose and what their money's for, that can be quite motivating. There's that sense of coherence, which is your life story, helping people revisit their money story, so-called story editing, that can be motivating. And then sense of significance, connecting people with their values, that can be motivating. But in all those cases, you're adding motivation to the game. There's a tool called motivational interviewing, which is finding the motivation that they already have. And so if they're feeling one way and also feeling another way, this is something called ambivalence. And ambivalence is, again, simultaneously feeling a couple of things at the same time. And this change journey goes through, I call it the ambivalence swamp. But to get from pre-contemplation to action, you have to go through ambivalence. I have to feel like I want this and don't want this at the same time, which means part of me wants this. So if we can speak to that part of the person that wants this, you can help them uncover motivation, the motivation that they already have, the reasons that they already have to change. So figuring out and learning techniques to help draw out that motivation can help them progress through the stages.
Yeah. So drawing out that motivation, tying that motivation or that purpose back to their financial life, is there a place for removing roadblocks? Because one of the things that I find when I just get calls from friends who are sort of getting started on their financial journey is a lot of times they think there are big roadblocks that I tell them are, like, hey, this isn't as hard as you thought it was, sort of thing. And I feel like I think a lot of people are just scared or fearful or uncertain. Is there a path for removing roadblocks that sort of unearths motivation as well?
I think so. And I think part of that is through, I think you can get there a couple of ways. You can get there through motivational interviewing techniques where you're paying close attention to the pro-change verbiage that they're using and paying less attention to, you're not ignoring, but you're paying less attention to the pro-status quo talk that they're giving you. So if somebody tells me that there's this roadblock, I can't do this, then they're lacking the confidence in themselves and figuring out other things that they've done before. So let's set this aside. Tell me another area of your life where you have overcome some kind of other challenge. What was it that got you through that? What kind of skills do you have? What kind of qualities are there about you that got you through that? And can those be applied to this? So there's kind of readiness to change. So am I ready to do this thing? I might think I can do it. I might think it's important, but maybe I'm not ready to do it. I also need to think it's important, this change. It has to be something that is important to me. And then I also, even if it's important and I'm ready to do it, I have to have confidence in my ability to do it. So those three things have to happen at the same time. And if I'm lacking confidence, then we can do some of those things I was just talking about, which is figuring out what is it about you that you already have that can get you through these roadblocks, and or how can I help you get more confidence? What can I do to increase your confidence?
Yeah. So are they ready, right? Does it matter to them? And do they have confidence that they can get there? There's a great framework for thinking about this. This is a 30-minute or so podcast. I just want to kind of give a nod to some of the ideas we're talking about today. Derek's talked a lot about motivational interviewing. That's worth a deep dive. That's worth some of your time. This sort of approach to eliciting strengths and talking about previous achievements is sort of rooted in solution-focused therapy. So sort of solution-focused ideas I think are worth your time if you're listening to this too. Derek, you talked about something earlier, which is this, where I'm going to misquote you here, but effectively we're helpful creatures, right? We want to give advice, we want to give assistance, and this is a largely a positive impulse, but sometimes this impulse can actually get in the way. And this is something social scientists refer to as the righting reflex, like this desire to make something right or to give advice. But sometimes this can be poorly received. Sometimes it's not helpful. Can you talk to us about the righting reflex, when it's helpful, when it's not, and sort of what we can do about that?
Super common, and it comes from a good place. Especially the more trained you are, the more of an expert you are, the easier it is for you to see people who don't have your knowledge, who may be doing something non-optimally, or there's a better way to do it. And I want to help you. So I'm going to notice that, and I have this reflex, like when your doctor hits my knee and my leg flails all over the place. Somebody tells me they're doing something that I deem it could use improvement. My reflex is to jump in and help. And you've felt this. Like I use this example. My cousin comes up to me and tells me that, hey, last year you told me about diversification, and I took that to heart. So I now own 15 S&P funds. Thank you. It feels good to be diversified. And that gut reaction you just said, it was like, oh, but those are all the same companies. That's the righting reflex. So that's an easy one, and that, depending on your level of expertise, there's a big spectrum there. Where that might not work, and where it often doesn't work, is when this advice is unsolicited, and most advice is unsolicited. So autonomy is a need, basic psychological need that all of us have. My mentor, Ted Klontz, has a list of 6 basic needs. I'm blanking on the theory right now, but there's 3 basic needs there with autonomy, belonging, and competency. But autonomy is a part of all of those. Wherever you're looking, autonomy is a basic need. So if I ever feel like my autonomy is threatened, it feels like an attack. Last time we talked about emotional flooding. If I feel like my need for autonomy is being threatened, I'm more likely to be emotionally flooded. So if I'm ambivalent, I'm holding two things at the same time. I both want to keep eating pasta and I want to lose weight. Those two things are incompatible for the most part, and I'm holding both of those at the same time. If I'm not ready to hear advice and you start arguing either of those sides, I'm out of balance. So if you come to me and say, this is all carbs, Derek, you're going to be tired all the time and you're going to get carb face and it's just, there's a better way to eat. You should focus on your health. I'm going to say, yeah, but, because it's always yeah, but, and then we'll argue the other side. I love pasta. This is my favorite food. All of my favorite dishes are this pasta. You're not listening to me. But then in a different universe, you argue the different side. You say, you know what? You've only got a few dozen trips around the sun. YOLO. Just eat whatever you want. And I'll say, well, yeah, but you're not listening to me because it's a lot more difficult to carry 210 pounds around than 190. And so I need to kind of focus on this weight. You're not listening to me. So in either case, if I'm ambivalent and somebody else starts arguing one side, my natural reaction is to argue the other side to maintain that balance. And if you're arguing for change and I'm arguing for status quo, I'm hearing myself reinforce the status quo. So I'm talking about the status quo. I'm talking myself into staying the same. So this might be worth saying more succinctly. If your clients aren't in action stage, offering them advice makes it more likely that they won't implement the advice because they're going to counteract with yeah, but statements, and then they're going to reinforce the status quo.
So when you encounter that, right? So you're an advisor, you've gone on to this benevolently moded writing response. You've tried to give advice, you've tried to make things better, and you're encountering resistance, right? You're getting pushback, you're hearing language that is privileging the status quo. What's your move then, right? You've noticed this, you're at a crossroads. What's your next move?
The way out of that is so now I'm the advisor, you're the client. I don't want you arguing the status quo. I want you arguing pro-change. So my goal here is to get you talking the other side to change. I want you, it's called change talk. So any conversation, any communication that's pro-implementing the advice, that's pro-change, I want that to come from you. Because if an advisor with a writing reflex meets an ambivalent client, the advisor is going to be giving all the change talk, all the reasons for change, which is more likely to backfire. Using tools from motivational interviewing, you can elicit change talk. And the clients say a lot of things. Most of it goes unrecognized. So they're saying change talk all the time. We need to reflect that back. We need to affirm that. We need to highlight that. And when they start to hear their own words, so they say the words, you reflect back the change talk. Later, you give a summary. Now they're hearing it 3 times, and maybe you send a summary email. That's 4 times. They're seeing their own reasons for change reflected back to them. And it's like the compound interest curve, where it's going to be slower at first, but over time, that becomes a pretty big wheel that reminds them of all the reasons that they want to implement this advice. You came to me for a reason. Let's get all those reasons out of you.
When you encounter this sort of ambivalence, if I'm remembering my motivational interviewing right, it's almost like you take sort of a Columbo approach to some of these things. Like, on the one hand, it sounds like you want to eat pasta all day, and on the other hand, you want to lose 20 pounds. Like, hey, help me understand, sort of thing. Help me understand how do you approach that ambivalence when it arises? Because I think many of us want to have our cake and eat it too, especially in our financial lives. What do you do with that ambivalence when it pops up?
So let me take a brief detour through the kind of the mechanics of listening. So clients, they mean something. They've got thoughts. They've got 60 or more thoughts every day. Most of these are unarticulated. So this is why journaling is so beneficial. This is why having some kind of a professional listener is so beneficial, because it takes those unarticulated thoughts, turns them into words and sentences and paragraphs, and it makes sense of this jumbled up ball of thoughts that they have. And they're here for your advice, and when it's stressful, so they probably haven't thought about this stuff before. So then you list some information, maybe you ask an open-ended prompt, and they're not going to ignore you, so they're going to try to answer that. So they're going to say something, but what they say might not be what they meant. So I take a guess, and I say something. And then I say something, and then you have to hear it. And that's the line that most people think is listening. At best, that's the hearing line. At worst, that's the waiting, if I'm just waiting for my turn to speak. But so I've got to say the words, you've got to hear them, which you may hear differently. But even if you heard it perfectly, now you've got to make an interpretation of what you think I meant. So it's like this game of telephone where, in elementary school, somebody whispers something and it goes around the circle, and it's comically different because there's miscommunication is going to happen at all these different stages. So I've got two choices. One is I can assume that I got it right, but I think we've talked before about the negativity bias. So I'm more likely to take a negative interpretation of what somebody said. What do you mean by that? So why'd you say that? So I can assume that I understood you correctly, or I can check in to see if this is what you meant. And so I'm closing that loop, and that loop closure is a reflection. So this is what reflective listening is. And that kind of sounds like, so if I'm hearing you correctly, you X, Y, Z, or, here's what I'm hearing. Is that right? And that's reflective listening in a nutshell. I'm not adding anything yet. I'm just helping you say what you mean. And it's very common for people to say, even if every one of those steps, I heard your words exactly, I correctly encoded them or decoded them, I correctly understood what you meant, but there's one line, what you meant to what you said, that's completely outside of my control. So it's common for people to say, yeah, I know that's what I said, but now that I've thought about it, that's not really right. Resist the urge to say, are you calling me a bad listener? Like, that was me. It's like a negative interpretation of what you just said, and lean into it and say, okay, great. Tell me what you mean, or tell me more. So that is reflective listening.
Yeah.
We can get into more strategic reflective listening when you choose, the client says a lot. So what are you going to reflect? And it's going to sound a little jargony, but there's like a simple reflection is when you're just helping them say what they mean without your interpretation. This is just everything that they've said. Is this what you mean? You can get to kind of a complex, different versions of complex reflections, like continuing the paragraph. So client says something, and then I say what I think was going to come next. So it's almost like they wrote down 3 sentences on a Word doc, and I put the next 2 sentences. Again, I'm not adding, I'm just saying what I think they were going to say. So what this does is it helps a why. And you might even start this with because. I didn't go see that estate planning attorney. That might be their statement. And you say, well, because it's hard to think about what to do with your stuff after you pass away. And they'll say, no, that's not it at all. I just don't like my estate planning attorney. Okay, great. Now you know why they didn't go see that estate planning attorney. So there's various ways to do that. You already did the double-sided where you're reflecting back the ambivalence. Always put the change talk first. Always end with the status quo talk. Always put the stay the same talk first and end with the change talk, because people will remember the second, and try to use and. So on one hand, and on the other hand, instead of but, which kind of cancels out the first half of it. But, on one hand, you haven't went to see that estate planning attorney, and on the other hand, you recognize how important it is, and that's kind of stressful for you. Is that right? And so you're reflecting back both sides of it, and reframes. So a client says something, you say exactly the same thing back, but with a different spin. And so I can't do this. You don't know how many times I've tried. I've tried everything. And then you might say, well, what I'm hearing is you're really persistent. Tell me more about your persistence. And so these different strategic reflections are ways that you can find that change talk and get them talking about the change talk.
Yeah, there really is such magic and such power in someone hearing their words back, right? Perhaps with a little bit of the subtext highlighted, with a little bit of your own interpretation, and helping them highlight that ambivalence, which they may have been unaware of, and work through it. just hearing those words back is often transformative. It helps it become real in a way that it wasn't before, and shows them that they perhaps had more access to the answer than they thought. I think also sometimes it highlights the ways that we're being silly and being self-defeating, but you're able to do it in a gentle way when you're not saying, look, you're being stupid, or, look, you're being self-defeating. Having them hear it, they can come to their own conclusions, which is, of course, more powerful. I've heard you talk about this. I've heard friend of the show, Dr. Christy Archuleta, talk about this. You advocate for the use of scaling questions and change rulers as part of this process of working with resistant clients. This is a practical and powerful tool for eliciting change. Can you talk to us about scaling questions and change rulers?
Yeah, and they're the same thing, just depending on people have a different preference for what to call it. But these are a tool for eliciting change talk. And so basically you're saying, let's put a number on this, scale of 1 to 10. 1 is this isn't important to you. This is the least important thing you can think of. And 10 is it's the most important thing for you to prioritize right now. How important is this for you? Or how confident are you that you can do this? Or how ready are you to do this? And the trick is you don't care about the absolute number. You don't care about the number that they give you. What matters is your second question, your follow-up question, which is, why is it so high? No matter what the question or what the answer was, rather. So it's a 6. You say, oh, great. Well, you give it a 5 or a 3. What got you all the way up to 6? And if you think about that for a second, it's because you're asking them all the reasons it's so high, all the reasons that they're ready, all the reasons that they're confident, all the reasons that it's important. That's change talk. So you've elicited change talk by asking, why is it so high? Resist the urge. This is very common to ask, why isn't it higher? Let's say a 9. Oh, so close. Why not a 10? And if you think about that for a second, it's because you're asking them all the reasons they suck and they can't do it, and I don't have this, and I'm never going to be perfect. You don't want them talking about that. So ask them, why is it so high? And get talking about that. Some people will volunteer that information. It's an 8. I'd love to give it a 10, but don't cut them off. Let them tell you all the reasons that they couldn't get it to a 10, which will actually strengthen your next question, which is, well, okay, so you're an 8. And despite all those reasons, you still gave it an 8 and not a 4. Why is it an 8? Now they're talking to themselves, why is it an 8, despite already hearing all those negatives? So that can be powering. And then that's what they already have. And then the next follow-up question might be, how can you help? So you gave it a 6. What would it take? How could I help? What would it take to get you from a 6 to a 7? And now they're going to tell you how you can help them move up, or a 6 to a 6.5. How can I help you get to a 6 and a 6.5 or a 7? And then they'll tell you all the reasons or all the things that might work. Maybe you could do it with me, or maybe you could do it for me, or maybe you could do most of it for me, or maybe you could give me the introduction. But they'll tell you how you can help them. Instead of you assuming, which is like my default mode, is to assume that I know what's going to be best for you. I want them to tell me instead.
Yeah, it's such a natural impulse, right? To go a 6, like, why is it, like, why so low? Why not a 10? What's wrong? But it's counterintuitive, but powerful when you talk about it. Say, 6, like, why so high? Why isn't it a 2? And there you're engaged in that solution-focused positive psychology idea of it eliciting strengths, eliciting previous wins, talking about change, talking about and highlighting the motivation that they do have. And then with that sort of the follow-up question, you can offer your own support, channeled through them to say, okay, how can we continue to make progress and get you to where you want to go? I love that. So, in addition to Derek's great work on this, I'd encourage folks to go back and listen to my conversation with Dr. Moira Summers. She has a great book called Advice That Sticks, which is all about sort of giving, just like it sounds like, giving advice in a way that's sticky and gets followed through on. And I'd also encourage folks to go check out the Orion Advisor Academy has a course called Communicating with Empathy, which is a free CE course where we cover some of these things too. So Derek, you're great to come back again in such quick succession. If people want to learn more about your work broadly, your work with meaning and money, and your work around helping elicit change in resistant clients, where can folks read about you and find out more about you and your work?
Yeah, absolutely. Anybody who's interested in this kind of motivational interviewing stuff for advisors, I'm putting together a masterclass now. So meaningfulmoney.life/MI if you want to join that wait list. But meaning.blog, that's where I do all my writing and sketches. And this newsletter that I write, I just recently opened this up to license to other advisors who want to use this content in front of their clients as well. So check that out. But it's all at meaning.blog or meaningfulmoney.life.
Beautiful. Derek, thanks for coming back.
Thank you. It was great.
Thanks for tuning in to Standard Deviations. If you can't wait till next week for more behavioral finance insights, visit www.orion.com. All opinions expressed by Dr. Daniel Crosby and podcast guests are solely their own opinions and do not reflect the opinion of or endorsement by Orion and its affiliates, subsidiaries, and employees. This podcast is for informational purposes only and should not be relied upon as a basis for legal, tax, and investment decisions. The opinions are based upon information the participants consider reliable.